Hello, folks. Hope you're all having a good day. So, today is Tuesday, 25th of February 2025, and we had a pretty eventful day already. And I want you to take a look at this low over here. And that low is residing at Monday, Monday, 3rd of February. So that was like my draw on liquidity going into today. Why is that? Well, we've gone up to purge this high resting above this, the buy side liquidity resting above this high here, and this run up going into this buy side liquidity from 16th of December 2024. We ran through that, then broke through. So this consecutive up close candle that went above this buy side liquidity, that's your bearish order block. From this candle here to this candle. So that's a daily order block, a daily bearish order block. And you can see the reaction off of that on Monday. So today we had more momentum, or this is a daily chart, by the way. And this being a daily chart, we had more momentum of price coming down for this. It hasn't taken out this low yet, but based on the higher time frame, that's the daily chart, we were showing more heaviness to want to go down for lower prices. So this was my target, or this is still my target. And for me to be profitable, or for you to be profitable in your trade, price doesn't have to go down to that level whereby you want it to go down to. You just need to know where is the draw on liquidity on that higher time frame. Where is the higher time frame trend? Where is the algorithm trying to reach for? So let's step down to a 15-minute time frame. So on the 15-minute time frame, I'll go down to what this is, but let me just explain what I want to explain. So in here we have the midnight opening price over here. Remember, the best buys occur below the midnight opening price, and the best sells occur above the midnight opening price. So that level over there is the midnight opening price. And one of the things we want to also see, whenever we are bearish, this is something you should put in your notes. Whenever you are bearish, yes, we are bearish because we are expecting this low over here to be taken, or we are expecting price to draw to this low over here, right? So because we are already bearish from that higher time frame, we are looking for a run above buy side liquidity. And that buy side liquidity it is a higher probability when that buy side liquidity is resting above the midnight opening price. So we have this buy side liquidity here. I was actually looking at this high here to be taken, but we just went right to that high, then started dropping from there. But the fact that price went above this high over here is enough to want to start seeing or anticipating lower prices. So we have this buy side liquidity being purged, and that high was from 115 today. We have this inefficiency here in form of a fair value gap, but it's now doing what? Acting as an inversion fair value gap. So instead of it supporting price to go higher, it's failing. So the fact that this inefficiency over here is failing to keep price or support price higher is now being used as an inversion fair value gap. So we have, if you look closely, we have down close candle, we have a down close candle, we have this up close candle. That is, we have this up close candle, down close candle. So among series of down close candle, we want to see up close candle or bullish candle act as bearish order blocks. So a bearish order block has three sensitive or three key areas, three key levels, I mean to say. The high, so over here, let me zoom a little bit. So over here we have the low, that if it's a bullish order block, it's the high, the opening price, and the mean threshold. But for the bearish, it's the low, so that's the low of the order block, as price is violating this gap, this white shaded area. We have the opening price, and in this case I'm not going to, let me just, for the purpose of learning, the mean threshold, that's the midpoint of the order block. So this whole range here, this wick, is very, very, very sensitive to price, especially when you are bearish. So price is reacting off the wick of this bearish order block and staying below the consequent encroachment of this 15 minutes BC that's now acting as an inversion fair value gap. Let's go down to a 1 minute time frame and look at what happened during that 9:30 price action, because that's like that's my model and that's what I focus on a daily basis. So before I do that, we have this gap here. I want you to pay attention to this 5 minutes fair value gap from 6:40 today, and this was that run above buy side liquidity. this was the run above buy side liquidity. Then this white shaded area, remember this white shaded area, this is that 15 minutes bullish fair value gap that is now acting as an inversion fair value gap. And now you can see that it's even much more clearer. We have down close candle all the way through to this candle. So this candle here, if I now refine that properly, that's a very, very nice bearish order block. You can see how the market traded up to that level and we began to drop lower. This is a low from 6 a.m. So the same thing you saw happening on that 15-minute time frame, and with this, that's also the same thing that's happening here as well. This look at this wick, look at where this candle is going into. It's trading into this wick over here. So we have a bearish order block here, a 5-minute bearish order block. And I'm going to step down to a 1-minute time frame and so on a 5-minute time frame, we had the opening at 9:30. So that's your 9:30 opening equity market opening price. So this here, if you notice, I have this ORGH. That ORGH stands for opening range gap high and opening range gap low. Opening range gap high and opening range gap low. Then we have the midnight opening price right here. So this level is that 5-minute fair value gap from 640 that I showed you. If you rewind the video and you just go back, you see where I got this level from. So 9:30 we opened and we began to walk with that 5-minute fair, with this 5-minute fair value gap from 640. This is our first presentation fair value gap. Remember, it cannot be a fair value gap from 9:30. It has to be a fair value gap that forms after 9:30, and this was the first fair value gap. So price trades into this, plays around this level, goes up to hit this 5-minute bearish order block. This is a 5-minute bearish. This is a bearish order block from the 5-minute time frame that we are making, or we are viewing on a 1-minute time frame. And you can see how very, very sensitive that level is to price. So here at 9:40, price broke down and closed below that 5 minutes fair value gap. Then notice how price began to remain below the midpoints, below the 50% quadrant. That's from this little dotted line here Notice how price began to stay within this level here. We traded up to touch that first presentation fair value gap one more time, but where are the bodies? Notice where the bodies are. The body is staying below the lower quadrant of this gap. So this is the upper quadrant, or let me just say upper 50%, and this is the lower 50%. So the bodies, and here's what I mean by the bodies. If I take off the wicks of these candles now, where are the bodies stopping? Exactly below or exactly at the lower 50% level of this 5 minute gap, right? So the wicks do the damage, the bodies tell the true stories. So as price is leaving this gap now, one of the things we want to see for us to now, because I know most of you, the question will be like, how will you now know that, or how can you avoid all this? Because all this price action here was very, very, if you try to rush into this market as from 9:33, this whole movement would have kind of like scared you out or knocked you out. Because if you are using this fair value gap, and for instance you are not aware of this 5 minute bearish order block, because me personally, when I took my trade today, I was not even aware of it. I was not aware of this gap, this 5 minute gap, this 15-minute gap I shaded here, this white area. I was not aware of it as well. I was only watching to see a displacement off this level, this orange shaded area. That was what I was looking for. So had it been you rushed in, this whole up and down would have scared most of you out of the market. So how do you now know, or how do you now take a trade and trust that it's going to keep going down? So now, since we have been working with the algorithm has been dealing with this level, this fair value gap here from the 5 minute time frame, and now you see that we've left it, and as price is leaving it, we are having what? A displacement. We are having a displacement in form of a fair value gap. So notice as price is leaving this 5 minute gap, the 5 minute fair value gap, turning into an inversion fair value gap. So the moment price is leaving this gap, what you want to see is a displacement, which is what you see happening here. Does price create a fair, and that displacement, we have a fair value gap. The fair value gap is the separation between the low of this candle at 9:42 and the high of this candle at 9:44. So this gap here is what we refer to as the fair value gap. So price rallied up into the fair value gap, and goes for that low at 6 a.m. and we've been pretty much going down since then. We have this candle, down close candle, down close candle, up close candle, down close candle, down close candle, down close candle. So what is this candle over here? That's your bearish order block on a 1 minute time frame. And I used to say that whenever you have another block like this with a swing high next to it, your stop, let's say for instance you wanted to use this other block for your entry here, your stop should be above the swing high, because most times price could come to this. Most of you make the mistake of putting your stop loss here, and sometimes price can get very overzealous and take that stop loss. So a safer stop would be slightly above the swing high. So once you see price trading into the other block, that's a very good sell setup. And where is that happening? This is happening inside that macro time from 9:50. This is 9:50 to 10:10 when the macro begins, and that's mostly the time that that's the time that is most advisable to start looking for an entry or something to use for an entry. So we have this order block, price trades into it, drops lower, we have a shift, a market structure shift, price trades into this gap at 10 o'clock, and we just kept going lower. So watch this low, and this was my execution for today. So I was selling as price. If you notice in this price action, we have this level where we have wicks overlapping each other. So my first sell was inside this volume imbalance. This is your volume imbalance. So my first sell was inside this volume imbalance, but you can see that you see a red line or a red kind of thing over here when I come here. So my first sell was inside that volume imbalance, spread, due to spread, that's why it's showing over there. And my second sell was at price was going into this fair value gap, because sometimes could very well just trade into the volume imbalance. Like yesterday, I tried getting into a trade and it just traded into the volume imbalance, and it just started dropping. And my limit order was on the fair value gap, but price used the volume balance to trade down. So I was using this, and if it would give me the opportunity of going into this fair value gap, I would add one more, which was what I did. My stop loss was just at this candle's high, slightly above it, and you can see how price trades. You can see how price almost came for it, but it didn't, because we had this other block here. And I know that we have a swing high here as well, but I don't expect price to come back to this level, because we've already done enough work. We've already spent a lot of time in this gap, this 5 minutes gap that is now an inversion fair value gap. So it won't be ideal for price to want to come up to this level anymore. That was why my stop loss was just at that low, at the high of the of this high over here. So it was somehow inside here. So price trades up to this. So as soon as we got below that 6 a.m. low, I was taking out most of my position. Then I took one more here and one more here. So it doesn't have to reach where you are, because I mentioned this low here. It doesn't have to get there before you can be profitable. You just need something to just key off of that will be easy and understandable for you. So I hope you guys found this one very insightful. Until I see you next, have a good day.